CRV, the token of the Curve Finance Exchange, is imploding. It's down 11% in just the last 24 hours. And what's the reason for that? It's a house. Among all the things in the world, what could bring down a DeFi protocol? A house. I mean, a fairly nice house, I have to say that, but nevertheless a house. So what's going on here? One of the main whales of Curve, one of the founders of the protocol, he is cashing out heavily. He's very smart about this. He's not just selling the CRV token. If he just sell the CRV token, it would not only be down by 11%, it would be down by more than 83%. Now, where do I have this number from? This is equal to roughly 110 million worth of the Curve token. And what's actually going on here, the very clever way to cash out without depressing the price. And it's a way to cash out even more than just by raw selling. What the founder has done here is he deposited Curve on a borrowing and lending platform, so on Aave. He deposited CRV and took a $110 million leverage position against it. Now, what does this do? It means the Curve tokens are not hitting the liquidity pools. They're not hitting the market. They're simply just being locked up in a borrowing and lending platform. He takes that as collateral and he pulls out, for example, stablecoins. Those stablecoins you can then afterwards in the OTC trading simply convert to fiat to then buy the house. So the Curve token still stays off the market as long as CRV stays above the liquidation price, right? You've got your collateral, you borrow something against that collateral. It's similar to traditional finance. You've got your house, you borrow against the house, you make a HELOC, for example. And then as long as your house still keeps enough value, it's in positive equity, you can serve the loan, everything is fine. In DeFi though, once your equity becomes negative, you get automatically liquidated and the CRV tokens that you deposited get sold off. And so the price decline we can see over here is not due to the founder directly selling. It's due to people anticipating that this founder might get liquidated on the position. And if that happens, then the borrowing lending platform Aave will have a lot of bad debt, because that collateral, if it's all being sold off, is not worth what it currently appears to be worth, right? You sell 110 million of the token, you depress the price by 83% at least, probably more, because that's the average price that you sell it for. The very last price that you sell it for is even lower than that. And so this is becoming a big thing. There is now a proposal by Aave to freeze those loans. And of course, there is a back and forth around this, because in the end, DeFi should be censorship resistant. There shouldn't anybody manually interfering with this. So is this crash in CRV justified? I very much think so. I would totally stay away from the token now. The platform itself is solid, has been around for a long time, it hasn't been majorly hacked. Technology-wise, all is fine, but this massive concentration of liquid token supply is definitely a problem. There's no real need to buy this dip here. Bitcoin and Ethereum have already come down, so why not simply just buy in those, especially Bitcoin. Ethereum relative to Bitcoin is relatively expensive. I make another video on that as well. Simply just buy into BTC and hold it for many years, right? Maybe even take a loan against that. But there's no real reason to get heavily invested into something where the founders are cashing out heavily. Please give this a like to help the algorithm, help to spread the word, help to grow the channel. And of course, feel free to subscribe as well.